Hi traders and welcome to the Technical Analysis Market Wrap on Friday the 30th of September. So the month has come to an end and a pretty abrupt end with this week the way it's been. We've been fairly volatile on a lot of the currency pairs and of course the key indices that we look at. So we'll jump straight into the charts and see if we can identify any trades for today and early into next week. So we'll start out here with the Aussie USD and look, it's been a really big one. It's ended up really at the same place it started if you look at it from a price standpoint, but it certainly hit some very, very low levels. Like we got down to as low as 63.70 at its worst, and it hasn't been down there in a very, very long time. So realistically, we've seen some reasonable movement. You go to the smaller time frames, you can probably identify some trading opportunities with the series of lower highs and lower lows, as we always do. Like you can see here that although it looks like it was a fairly steep fall, you can see that we've got a series of lower highs and lower lows all the way through, pullbacks to the 20 moving average. And although it would have been difficult to trade all the way down to the 63, if you're only following the trend and taking out the new lows, which is a very sound strategy, you're not going to have too many problems. So, realistically, it was pretty good. But now it's finding itself with a bit of a resurgence, and we're finding ourselves nearly where we started. And I think the important time frame that we really got to look at here is the weekly, because it's this close that's going to really make a difference as to what the tone's going to be for next week. If we can get a close around this level here or even slightly higher, that's going to be a very, very big hammer candle. Okay, and on a weekly candle, it's a very no nonsense time frame. So you've got to take it for what it is, and basically it's saying that it's reversed what was an extraordinarily strong fall. And we can see we're already at the start. Like even if it closes here, you can still call that a hammer. But if it closes up a little bit higher, it's going to be a perfect hammer in, like I said, what is a very, very strong zone. And then we can start aiming and looking for a move back up to the 67-cent level next week. And I would be very comfortable that if we do get this hammer close at the end of New York tomorrow, that we can start targeting those long moves up to that 67. And there's still quite a few pips. There's about 180 pips ish to get even before it reaches that level, and we know that's a roll reversal zone because it broke that support. So really, really good trading on this one coming up, I reckon. We just have to keep an eye on it, see where it does close. Of course, if it actually closes a hell of a lot weaker, then we just round up the big range of the week and trade within that range until we get a breakout, and that's generally the best way to play a big volatile week. All right, move over to the US dollar CAD. And a bit of the same deal here, really, that it hit really, really big extreme highs, 138, and that's a very, very big level for it. It hasn't been there in a long time as well. Now, this one has bounced off that little mini support level. I mean, you can't really say that was a great support level because there's really just nothing there that we can actually really count on to give us that support. But what it has done there is it's found itself a bit of a price point where it has rejected off it. So it got down to the 136. And it's a 200-point range, and it's found itself nearly in the middle of it. So really the best way to play these until we actually get a breakout either higher or lower. A lower breakout, we start targeting probably the 100-pip moves every time it breaks down from this level until it gets down to the real levels where we would expect it's going to find very solid support. But until it gets a daily close below the 136 or a daily close above the 138, the best way to play this one is actually sit inside this zone, go to the smaller time frames, you mark out the week, and then you can go to the smaller time frames, like the 1 hour, for instance, and trade within that range. So you can see we're pretty much in the middle of it now. But if you hover and trade within this range and these two bands, until we get a daily break, you're going to get some good scalping opportunities. So you can even go to a 15-minute chart and you're going to see even more price action. You can see the high, low sequences happening. You can see all the way down there. That worked out. And you can see here now we're in the middle. So once we get a breakout in either direction, you know where to aim for. You got the 138 on the high side and the 136 on the low side. So pretty easy trading really on it until we get that daily break above these levels. Scalp inside this range until the daily break comes, and then trade to those points. And then, we'll see where this one takes us. But it's been very strong, for a long time now. So a bit of sideways consolidation is not going to be the end of the world. All right, we'll move over to the US dollar yen now. This one's been an interesting one because, I mean, it hasn't really had the big volatile moves. We'll go straight to a daily, actually, is probably the best way to describe it. You can see that we've been inside this horizontal mini channel for the last few weeks now, and it's struggled. Although the dollar strength has been good, it hasn't really busted through and broken to new highs. So, really the upside is probably that the 20 moving average is still holding it up now. I mean, it hasn't broken down below the 20 moving average in quite a bit of time, as you can see. And it's still holding above it right now. So realistically, it's we can see the MACD starting to drop now, but that's to be expected because the market's going sideways. So obviously the moving averages are going to be getting closer and closer together. If we get a daily close above the 145.20 area, then we can start looking at targeting the 145.50, 145.80, 146, because really they're the ones that you're going to be starting to scalp towards. I don't really know how high it's going to go. No one really knows that, but you want to keep your shorts fairly sharp on this one, because it could reverse at any time. Of course, we know that there's intervention at play in all manner of parts of this particular economy, so we've got to be very, very careful. We know dollar strength is running rampant as well, so this is a very precarious one. So for me, keeping the trade short on this one is probably the best course of action. But it is pushing to the high side. Unlike the other US dollar based pairs, this one is trying to break higher, but it hasn't gone outrageous, really. Like, it's been fairly contained over the last few weeks. So really keeping inside this range is probably the best way to play it. Between the 20 moving average is starting to squeeze up between the top of the band and the 20 moving average. If we get a close below the 20 moving average, we can trade down to the 41, which is the bottom of the band. If we get a close above the 44, the 45 really, 145, that's when we're going to start looking at moving up. But in the meantime, just scalp inside that range. And it's a pretty tight range. I know this is on a daily, but if you go to a 1 hour, you're going to be able to see that there are little bits of movements that you can do. Here's the band. I mean, you need to extend it, of course, for the 1 hour, because we haven't done that. But if we see a series of lower highs and lower lows on the 1 hour chart, okay, we know where we're aiming for. Like, you got pretty easy aims to get there, and as you can see, when it does move, it moves in a pretty orderly fashion to get there anyway. So we're looking for shorts down to the 141 to 142 area, which is the bottom of that band, but only if we get a break of the 20 moving average on the daily and a series of lower highs and lower lows on that one. So pretty good trading. Over to the dollar index, this has been a really, really big mover this week. We've had some big swings on it. As you can see, we'll just straighten it up a little bit. It's still obviously in a very, very big uptrend. I mean, it hit highs of 114, nearly 70 it got to. It's having a bit of a retrace now. And look, in the eyes of the MACD, we're still separating. We're still seeing 20-50 crossover separation. We've obviously got the 12 and the 26 are crossing even more and separating even more because of the histogram. So realistically, there's still a lot of momentum with this one. This could be just taking a breather. And this has coincided, of course, with a bit of movement in the indices as well. So this is one to watch. And obviously the euro is a trade here. I mean, the euro is the one you want to be looking at, because it's the one that's going to really tell us the story of how we're going to actually trade it, because it's the biggest beneficiary of this weakness. But I would expect, though, that if it's going to continue to sell off, the next real level of support is going to be at around that sort of 110.50 area. That's the next part where there was resistance, and the 20 moving average will help catch it slightly before then. Not sure if it will get all that low, but I mean, it'll be healthy for the trend if it does, because really, trends are a series of pullbacks to good levels to continue on to keep the strength up. So you don't want to see an out of control market, because they're unsustainable. So if it hovers around this level here, I mean, that would only be probably a 38.2 pullback anyway. It wouldn't be a massive pullback there. If we take that swing, you can see there. Oops, hang on, just draw that for you. So that entire swing, that pullback's right on the 38.2, as you can see. So realistically, it could turn around here, but I would be looking for a small time frame change of trend, maybe a 1 hour or a 4 hour higher high, higher low sequence. And if it does that, then we start to look at shorting the euro. So we'll go over to the euro now. You can see we've had a big bounce off this level. And look, it's still obviously in a downtrend. I mean, there's no question about that. This has been one of the most orderly downtrend sell-offs we've seen in a long time. Very, very orderly, lower high, lower low sequences all the way down. Very easy to trade in that instance. But it's reaching levels now. I mean, it got down to a level of 95, sort of 40-ish. That's a very, very low level for it. No real historical significance from a supply standpoint, so it's hard to say support's going to be there, but we are seeing a big move up, and the next real test for this is going to be 99. That's where the resistance is, because you've got support that was right through there, and you've also got the 20 moving average. So if we see a big move up on this one, and it's only the best part of 80 or 90 pips away, it's probably going to find a lot of trouble at this level, and that's going to be the do or die time for it. Is it going to turn around there? Because if it finds weakness there and sells off, we're going to pretty easy level to aim for, which is about 400 pips lower. So while momentum is strong with this, if you go down to a 1 hour time frame, that's what you're really looking for. You're basically looking for a series of higher lows, which you've got, and you're aiming for the 99 level. So if you're scalping long, you're going for the 99. If we see a little bit of weakness and we see a series of lower highs and lower lows, we can start aiming back down for the 96.50 area, which is the first real point of testing. Probably wouldn't go all the way to the very extreme lows. I'd be going down to the 69.50 96.50, sorry, in the first instance, and then taking it from there. But pretty good trading on the euro, and I think some good opportunities coming up next week. Okay, and the last one we'll have a look at is, of course, the S&P, the all-important S&P. This is on a 1 hour, but we'll take it to a daily. We'll just do the overview on this, because I think this is a bit of a wait and see. We can see we've had a very, very volatile week. We've seen a big sell-off at the start of it, broke the very key level of 37.50, and it got to the lows of 3600, which is a no-nonsense low, but it has got support here. We know this one has got support, and this is a do or die time for it. If we get a daily or weekly close below 3600, we might see a lot more red next week, and that could be potentially some good opportunities to get it down to 3500. But if the week closes higher, especially if it closes higher and gets itself above 3700 again, then it might be the end of the sell-off. Look, we know that the September is traditionally a very, very soft month, and has certainly done that. But now, we're starting to look for the next earnings season, the Christmas rally, all of the good things that the market starts to pick up on once it gets to the October-November period. So we're going to be very, very mindful of that. We know we've still got, obviously, inflation on everybody's agenda. We're going to wait for the news. We've got non-farms next week. So all the things that are going to help play this one out to the next direction are going to be happening next week, really. But for me, the important close is going to be the weekly. Wherever the weekly close is probably going to set the tone for next week. You can see that we're basically at support. There's no worries about that. We hit the 200 moving average. If we get any resemblance of positivity tonight and we get a close above 3700, I think that's going to bode well for next week, and we can probably start to look for 3750 and 3800 pull-ups until we start to get the news at the end of the week. But if we do sell off tonight in the US session and it closes on a slows, then next week is going to probably be pretty ugly. So that's the best way to play it. Difficult to scalp this one, though. I probably would be leaving this one alone until we get a weekly close to give us some good direction as to where we're going to go next week, and I think we'll have the fun next week. So I hope everyone's had a great week's trading. It's been very, very volatile, and we've had some really good moves. Hopefully you're able to catch some of them, and have a great weekend. Look forward to seeing you next week.